Okay, good evening. Welcome to Sector Situation here for the September 25th here on Sunday. Doing this one a little later than normal. Unfortunately, we had some traveling to do because of our RebelCon conference. So I apologize for the lateness, just trying to get this out to you guys. Wayne is traveling, so again, apologize for me doing it. I know you guys have been liking Wayne. He go a little bit through a little bit more detail, but he was traveling a little bit longer today. He actually drove, so a little bit longer of a commute, let's put it that way. So typically in this, again, I'm gonna try to do as best I can to kind of mirror what he does, but let's get through our, let's go this way and this one for the disclaimers and we can get started. Okay, so hope you guys can see my screen, and I just kind of just do some comparisons real quick because obviously we're trying to look at what's going on in the market, and when you have such a horrible market like we did last week with 3 days of just extreme selling, everything kind of gets thrown into the mix, right? So you can see even utilities were down, but in a comparison perspective of where we are in terms of the market, they're still holding up and doing okay in terms of at least the XLU in terms of the ETF. So they're sitting right on the 200. I'd be a little bit concerned it starts to really get uglier. Taking out the low here, taking out the low here. You look back on something like the weeklies, right? This has been a phenomenal trend. But again, does this stay in this kind of mindset? I know there's a lot going on with the utilities. I really don't expect anything to upset the apple cart, but you can see when we do have recessions, this does eventually start to fall off, right? So, we look back in a major kind of pullback, your 2000, your 2008, your problems in your March 2020, obviously, pretty ugly. So that would be an ugly turn if we do start to take out the level back here on the weekly basis. Maybe you do come back down and retest this area. That's a pretty big thing to keep an eye on in terms of that. But again, that would be probably more towards the last resort if you're looking to short something, because they typically are a flight to safety. People tend to buy them for the dividend and the yield in terms of those. Working our way down the list in terms of stocks that have been kind of performing and doing pretty well. Energy has done pretty well, but obviously crude got hit on Friday. And you can see that we were holding our own here for quite some time in terms of the XLE. But then on Friday, with the crude being down, this thing gapped down and was sold into pretty aggressively. So again, there's typically a little bit of a flight to safety if there's a stabilization in terms of crude, but we're not quite having that yet. Especially when you have an administration that's offering more barrels to the mix here. There's been talk of a lack of demand, so buildup of yield, or buildup of product, that's going to force the price down. So again, we'll have to see how it does OPEC respond to that in any way with this move. There is a sweet spot. I believe it's somewhere around 85-90 for OPEC. We'll have to see if they kind of step back in and move that back up, because crude did get hit pretty hard on Friday. Healthcare, another one that has been sold into, but you can see that they are really trying to hold these things up. Green candles, gap down, and green candles, so at least holding their own. But in comparison to where the June 17 low was, again, you can see how when everything starts to fall, it's something you have to be aware of, right? So is there a little bit of catch up here to maybe come back down and retest if the broader market does retest or break those levels? So you could see something like another gap down and follow through on this on some of these bigger names in terms of the XLV. Obviously you look at something like the UNH, and that still has done pretty well comparatively. So you may want to start to look at some of the smaller, or I should say some of the individual names, not necessarily smaller, but some of the individual names in some of these places that are holding up, and maybe there's an opportunity in some of those. Working our way down to the consumer discretionary, and you can see in comparison to your June 16 lows, we're still holding up pretty well, but not as well over the last 3 days, right? So we took out these lows, obviously doesn't look great, and it's been in a very correlated manner against the market. So again, do we see lows in the broader market? The SPY the Qs, do they start to retest these lows? If so, then I think you're going to have the same type of follow through where they will come back down and retest these levels in a correlated manner per se. So working the way down the list, staples have done pretty well, maybe not quite as well as consumer discretionary, but you can see the big gap down. They were holding us in check, and then the big sell off on Friday really knocked us off the socks, getting back down and retesting. I would say, retesting kind of just below the lowest open, but did not necessarily reach the lowest point of June, that June 16, 17 bottom. But what it is getting, as we're working our way down the list, just to show you the ones that are the worst, best to worst here, at least from kind of comparing against this June low. So again, this one is held in pretty well, but definitely one to be watching. Again, you could look into the, and I want to go to our, on here, there we go. So you could be looking at something in here, Procter and Gamble, right? That held its own on that one. A couple of the other big names right in here you may look at, that did pretty well, right? But again, the whole ETF went down, obviously, because of what was going on in the market. So working our way down a little bit more, home builders, right? Still with what's going on, they are managing. There's actually been a couple surprises in this one with earnings. I think Lennar came out and did okay, right? So you're looking at something like this, and you're like, why are we still kind of in this world? Well, really came back to their debt load. And because of how strong the houses have been, they've actually been able to get out of a lot of debt, right? So this is, and the margins that have been put on some of these products, that they now can sell these houses with a little bit higher margins than normal. So again, do those margins start to get squeezed? We'll have to keep an eye on that. I think would probably be the next bigger picture on that. Right from the home builders, we can look at the financials. That's right back down at the lows as well, right? So we are retesting this area. Obviously with what's going on, there's some of the bigger names in terms of like a Credit Suisse, in terms of the credit default swaps, obviously getting back up to historical levels. We're talking like Lehman levels. I wrote about that in the market outlook, quick little blurb there, but definitely want you to be, aware of that. Does that start to play into the bigger picture in terms of some of these? You start to look at Goldman still holding in pretty strong comparatively to its June lows. A JP Morgan working its way back down in terms of the bottom. You get into something like the Bank of America not doing that bad. A Citigroup right back down on its bottom. So again, I think you're going to have to pick your poison on which financials are holding up versus others. Maybe there's some opportunity there in terms of which way you would like to play those. Coming from the financials, getting to the semis, they're holding their own at the moment, but back down, retesting that June low, not a good sign, especially as some of these have really come under fire lately. And we've actually had some restrictions, or I almost can call it a sanction, right? Our government put its own sanctions on our own companies so they can't ship their stuff to China. So that's done some restrictions and reduced revenues, and really kind of hurt the business here, and put a demand crunch on some of these things. So I definitely think this is one you want to watch for a break as well, leading into tech. Again, could be the thing that's pulling this down, as Qs are still slightly above this low as we watch it. If we continue to break, then I would think that the Qs would be probably breaking as well in terms of the bigger picture there. Metals kind of still hovering on the lows here as well. These are all kind of breaking down, but again, I think the thing to watch here is the dollar. And you can see, as let's say the high here was a A26 in the XME. If we go over to the dollar and look at the A26 or 811 in here, really started to put together the rally. And then towards the end of this, really started to make another push here. So metals have just been kind of peeling off as the dollar has been rallying along with interest rates. So definitely going to be keeping an eye on the dollar and that to see if we get any kind of love out of the gold and silver and some of the miners in terms of that. XLK working on technology here, and see, this is one that's actually broken this level comparatively to the Qs, right? So definitely want to be aware of the technologies and the weightings in them. Again, the largest weightings in here is Apple and Microsoft, then NVIDIA. So, you can see when you're comparing this and saying, well, how does Apple and Microsoft still fare like, or the XLK kind of fare like this when you have an Apple and Microsoft kind of still doing like they are. Apple's right there, held its own on that last Friday low. So that's definitely one I'd be watching if that starts to break. Microsoft did break down on Friday and take out the low. So they're about 21, 22% equaling out in terms of that index, or that, I'm sorry, that ETF in terms of the XLK. Let me go back to that real quick. So that is, I think, I'm sorry, 24%, 21%. So a little bit more for Microsoft, but NVIDIA, MasterCard, AVGO, Cisco make up the next several. And I think they're all leaning down. That's why you're seeing this kind of retake this level to the downside on that one. A couple more sectors here in terms of industrials. And you can see industrials looked really, really weak. That plays into what was going on in the diamonds. They actually made the lower low and managed to close, I think, right close to this big low back from the 617. So the low back here was 296.39. They managed to close this thing at 295.86. So about 50 cents off of this low. So we'll have to see what Monday brings for that. Do the industrial still continue to get hit? We covered the miners, but that the XAU, which is the gold and silver index in the Philly index here. So this did break down, make a lower low there. Not a good sign for gold and silver. The XLB materials, that kind of comes back into play again, very ugly in terms of the bigger picture with the gap down on Friday. So again, these are all extremely getting to the point of oversold in terms of the bigger picture, but breaking down here. So comparatively, these are the last couple here are the worst in terms of the breaks. And again, if you start to see any further lows, we would be continuing to play the lows breakdown of that. You have the XLRE, which is real estate. You can see this is working and breaking the lows much worse than where the builders are, right? So obviously this is a little bit more aggressive in terms of what's in there. This is not really kind of real estate as you would think. This is really more of things that are heavily reliant on their real estate, like an AMT or a CCI, a SBAC, a well. So a lot of these guys are, the big names in this sector, and they are down to the top one. I think the top 1 and 2 are AMT and then a PLD. In terms of the two big names, and I think they make up roughly 20% if my memory serves properly on that. So those two, again, you can see back down towards lows, and the AMT is getting back down towards bigger lows here, right? So if you zoom out a little bit on something like that, though, you can see the bigger picture. If this starts to break, you're not that far from the 21 lows. And then if I zoom out a little bit more to like a 3-year, right, even back down here, that still would be a massive drop. You're trading at 228 right now. Start to watch the lows in that. Then you have this big swing low, and then the 174. Things really start to get ugly in that space. And then we have the worst offender, which is communications. And this continues to get rocked in terms of the bigger picture here. Obviously, the big name here is Meta, I believe, then Google, or I guess depending if you want to look at the other way, if you look at Google as one, but you have Google, the A class, and Google in the C class, which is just Google, GOOG. They have both broken down below that big, let's call it a rectangle, and looking pretty ugly here. So typically when you look at that pattern, that could be a further breakdown of the height of the pattern. So you could go low to high, low to high back here, right? So that's a pretty big move. Let's call it 100 to 123. So that could potentially be back down, maybe at the lows of this area, 85. That would put it roughly 75% of the total move of roughly that 20 some dollars. So again, that could be pretty ugly in terms of the bigger picture of where you could find support. You do have a gap on Google, GOOG, And then I think there is another one here, and that looks like it could have come pretty close to filling. So maybe if we can get that to rally on Monday, that could help. The other one that is the major right there, again, like I said earlier, was Meta. You can see that breaking down and coming back down. The big low down here, 137.10, has been a target for us in a lot of different services. So definitely got to keep an eye on that one in terms of the bigger picture if you continue to see this thing break down. Obviously, the big picture in terms of our VIX, right? This is definitely could be catastrophic if we start to take out lows in the SPY, because we have not broken the big swing low yet, right? In terms of back here. But if we do start to see new lower lows this week, then the VIX will probably pop back up to potentially retest like the 35 area up in here, right? So there's that fear factor where we do have that whoosh, that one final push, at least for the existing cycle. I do feel like maybe we can get a pop, and then maybe another drop in terms of the bigger picture, but this could be prolonged for a while, right? Maybe we can get through an earnings season. Maybe we can get some positive earnings out of something, right? I don't know quite yet what that would be, but hoping, right? Got my fingers crossed that maybe we can get a little bit of stabilization, another chance to sell in terms of an opportunity. So good luck this week. Again, if you need us in any specific way, please check us out in one of the specific forums in the individual services, and we'll try to get back to you as fast as possible. But I think we got a rough week. I think we're going to expect a little bit of volatility because the Fed heads coming out and talking. So just got to be ready and aware and check the market outlook. I did try to put, I think there's 15 or 16 different speakers coming out this week. So you got to be aware when they talk, and because when they do, it's probably could potentially move the market, right? Especially if the market's down and they're kind of throwing another log on the fire. So good luck, and we'll talk to you guys soon. All right. Thank you.